Welcome to the space. Let's get started. Any questions, comments, please let me know. Request to speak. It's going to be a short space. I got about half hour to go. Dow Jones, NASDAQ, S&P 500 all flat. Russell 2000 up 0.5%. Meta is down more than 2% today, finally breaking its 20-something day run of positive days. Intel is up 10%. Medtronic down 7%, Robinhood down 5%. So very volatile on a stock by stock basis. But overall, markets are flat. The 10-year Treasury yield is up 6 basis points. 5-year Treasury yield is up 5 basis points. The Empire State Manufacturing Index for February came in positive, surprising the expectations of -2 reading. And then housing market index for February was much worse than expected. I think the housing market is going down. I think the prices are turning down. I'm going to have more. I'm going to have more on that tomorrow. 1 second. Please let me know how the sound is, if you can, on YouTube. It should be okay, but all right, let's see. Let's read this quick article from Reuters on markets. If there's anything I missed. Stocks edge higher as markets digest earnings tariffs. Global equity markets edged higher with Wall Street stocks slightly ahead in choppy trading and European shares hitting record highs on Tuesday as markets digested strong US earnings, trade tariffs, and big European defense spending hike. The Pan-European Stock 600 index hit an all-time high of 558 earlier on Tuesday as a gauge of defense and aerospace stocks. On Wall Street, the benchmark S&P 500 was slightly higher, while the Dow and NASDAQ were losing ground, with consumer discretionary, utilities, industrials, and financials advancing, while technology and energy shares were the biggest losers. I think people are trying to digest everything going on with not only tariffs and how that could impact things, but also general valuations. We feel like the market is pretty expensive, said the portfolio manager at Villiers Co. in New Orleans. Chinese stock market rally during Monday's rare meeting between Xi and domestic business leaders also boosted risk-taking appetite. European leaders vowed to step up support for Ukraine if bilateral talks this week between Russia and US led to a hasty-paced peace deal that compromises Europe's security. Investors also hope this weekend's German election will lead to economic stimulus. Expectations for higher government spending lifted Germany's benchmark 10-year yield to 2.5%, near its highest level of the month. That means massive fiscal transformation in Europe, said John Hardy, global head of macro strategy. He expected Europe's index to outperform Wall Street this year. Europe's stock indices are dominated by industrial groups, energy producers, and banks attracted their biggest weekly inflow last week since January 2023. Thank you for letting me know this sound is good on YouTube. Minutes from the Fed's general meeting, which held borrowing costs at 4.25 to 4.5% are due on Wednesday. I'm going to be reading that in here. I think these minutes, I should stop paying more attention to it. That follows hawkish comments from Central Bank Chair Jerome Powell in testimony to Congress last week and cut consumer price data. The yield on benchmark 10-year notes rose 4.3 basis points to 4.52%. Quote, you've got on up the tariff situation, which I think is going to be more saber rattling and negotiating than anything long term. Then the other thing is inflation that could be a little more stubborn than people think. And I don't think the Fed can cut interest rates as fast as originally expected, Villiers, the portfolio manager aforementioned, said. And I agree with that view. I think the inflation is dead. I think inflation numbers are going to come down. But I think the Fed will wait for several months before cutting further for more evidence. But I'm confident that inflation is over. We'll see how the Fed's waiting game is going to impact growth numbers. There has been some downward revisions to GDP growth figures in recent months here. The US dollar advanced against major currencies with losses led by the euro, garnering safe haven bids amid tariff concerns and peace negotiations on the Russia-Ukraine conflict. Let's see, Brent crude oil was steady at $76, up 0.5%. Euro dollar was 1.05. So the dollar is still pretty strong, affecting exporters, obviously. Any questions, comments? Please request a speech. Couple of observations here. The expectations for Q1 deliveries are coming down sharply. Currently, according to Kalshi, currently at 362,000. The Troy's expectation is lower than market's expect, but way higher than this figure. So I suspect Troy will have to lower his expectations for Q1 as well in the coming months. Let's see, the current expectation for Kalshi, the betting website, is 362,000 as shown at the top of our screens. If it materializes at 362,000, this is going to be the worst quarter for Tesla in 3 years. And that says a lot, I think. This, the as late 2022, I think the Q3 call in late October 2022, Elon said that he still expects 50% growth as far as the eye can see, year after year after year. And that obviously is not materializing. Not only that, last year in 2024, Tesla deliveries dropped from 2023, and this year is shaping up to be an even bigger drop. So I wouldn't be surprised if Tesla delivery this year drop by 20%, obviously pressuring margins because of unused capacity. And currently, the expectations for the new redesigned Model Y is very high. I mean, Tesla bulls are expecting Tesla deliveries growth to come back because of the redesigned Model Y, but I don't think that's going to happen. I think the Model Y redesign will underwhelm expectations, just like the Model 3 redesign did. So the one thing Tesla bulls are missing is that for the last few years, Toyota's deliveries have been constrained by low inventory at dealerships, and that's not the case this year. Toyota's inventory levels are at a healthier level in 2025 versus 2024, 2023, 2022. So I think that's going to continue to pressure Tesla's deliveries across the world. On top of that, BYD is growing double digits across the world. BYD is now building factories in many regions. So, their supply chain, their supply is increasing. So that's going to pressure Tesla's deliveries as well. And, the one, thing that could have saved Tesla's deliveries, FSD 13, is just not as good as Tesla bulls expected. It's actually in line with my expectations of 97% trips completed without a critical intervention. So FSD progress is highly predictable, despite what management will tell you. I pinned at the top of our screens the data that I have, that I see, and my predictions for hardware as well. And feel free to like and repost this to spread the word. Aside from that, I don't really have anything else to say. I'm working on a new article that I should probably get back to. Any questions, comments, please request to speak. Otherwise, we're going to end this short space and we're going to continue tomorrow. I'm going to wait a couple of minutes. Okay, thank you very much, everybody. Sorry for the busy day. I have to get back to my article that I'm going to publish sometime this week. And we can continue tomorrow with the regular scheduled time. And Any questions, you can always just reply to one of my posts. I see most replies and try to reply to everybody. Thank you, and have a great day.